All right, I want to do a little review about this guy, Greg Mannarino, and I haven't made a clip where I actually take what he points out and actually try to review and kind of respond to what he has to point out. I mean, this is just a short clip. It's only about 5 minutes or so. And to a lot of people, people think that this guy is the biggest joke in the entire gold and silver pumping YouTube community. Okay? So, anyway, let's just take a look what he has to point out.
Hi everybody, it's me, Greg. Why today? It is Thursday, March 27th, 2014. All right, people, so what's going on here? Well, today the U.S. equity markets finished in the red, but just below the flat line. The market was up and down all day, real tug of war going on here. Um, but let's put this into perspective. So we got economic news today. Let's start with this. Initial jobless claims.
Okay, well, first of all, Greg, do you ever talk about the reasons why the stock market is going higher? Or you just, oh, it's just a tug of war. Oh, let's just put that aside. Oh, it's still bearish. It's going to crash. It's going to continue to plunge. Does he ever tell you why, what is going on? Does it give you fundamentals? Does it give you technicals? Come on, people. Why did the market stay flat that day? Now, yes, some of it had to do with Ukraine fears. But what were the factors that helped pull it higher? Okay? It was earnings. It was corporate earnings that did better than expected. You see, people that don't give you the basic important aspects of why markets go up and down, they're not the people that you should rely on. You should not follow on investment and financial advice, okay? You people need to understand these things because if you don't, then you're really going to be in the woods quietly and possibly be slaughtered. So these are the things that you kind of have to really put into perspective. So in fact, when you look into this, despite all the tensions in Ukraine and emerging markets, the stock market is doing better than what a lot of people have been moaning about. In fact, it hasn't plunged so much since the start of the year. This is a very, very bullish sentiment. I mean, look at this guy. It's just so unbelievable. I mean, wow. How insane can this really get? And also, I forgot to tell you, one of the reasons that the markets went down was because of some disappointing news from Citigroup. So, but he really wants to tell you that it's going down because the situation in Ukraine is going to burst the economy and we're going to have economic collapse and this whole rally was a hype. Come on, people.
Fell by 10,000. Okay, whatever. It's supposed to be good news. But we also found out that we're not adding a significant amount of jobs here to make any difference. So one thing weighed against the other equals about a zero, actually negative. We also found out that pending home sales.
Okay, first of all, Greg, do you ever explain to the public why we're not adding a lot of jobs? Do you explain the fact that why people are leaving the workforce and why we're seeing all these problems in employment and finding a job? Well, I will tell you something, okay, from my perspective. Okay, do you ever talk about the reasons that we're having difficulty with wages and employment is mainly because of our trade policy? Has this ever guy ever talked about these things? Not really. Based on my research, no. Okay? But he wants to tell you it's largely because of regulations and a lot of other things and simply because the fact that this economy is phony and all this and okay, maybe that has something to do with it, but it's mainly because of our trade policy.
are at the lowest level since 2011. That is not good. What else happened today? GDP was revised up to 2.6 from a 2.4. Wall Street was expecting a 2.7. So really nothing going on here. Earth shattering, nothing to push this market anywhere. I do believe the market is trying to move higher here. And from a technical standpoint, it does appear that way, but I don't think they matter right now.
Of course they do. Of course, there's a lot of favorable aspects for stocks. And, you keep pointing out that real estate is going to fall, which it wouldn't surprise me if it falls because a lot of this was just hype. It was just a prop up with the halting of some foreclosures and all this lowering mortgage rates, difference in lending standards. So yeah, it wouldn't surprise me, but that doesn't necessarily mean the stock market is going to plunge like it did in 2008. Come on, people. He wants you to bring these facts to bring you fear and hysteria. And the sad part is, not only you get into these toxic assets, you miss out. You miss out on a lot of gains. I mean, it's just so unbelievable. And the fact is the market is doing still better than what a lot of people expect. And I believe that it will continue to be bullish because for a number of reasons, because the price earnings ratio is favorable, earnings are beating, it's doing well into these crises that he keeps talking about. We're seeing that when you factor in the rates for bonds, it's pretty low, so you're seeing a lot of money flowing from the bond market to the stock market. And the same can be talked about commodities, because commodities had such a run-up several years ago. So a lot of these factors are bullish for stocks. Now, can I tell you that it's going to go up next month? I don't guarantee it. And are we going to see a crash anytime soon? Sure. But will it be anytime, like as in next year or this year? I doubt it. Okay? I mean crash as in like severe crash, as in 20, 30, 40%.
Because again, the market is moving further and further away from the fundamentals that are supporting it. And it's in a bubble. We've gone over the definition of a bubble many, many times. And I'll just reiterate that here. When any asset class, whatever it might be, starts to move above a price that the fundamentals dictate, you got a bubble, period. And it's very simple to see what's going on.
What fundamentals are you talking about, sir? Are you talking about earnings fundamentals? No. Are you talking about rates of bonds? How that's favorable for the stock market? No. Are you talking about a lot of other things, growth forecast? I mean, come on, people, you've got to really understand, people, that this guy is giving you a lot of partial truth. This is a guy that he's basically sitting there acting like as he's some sort of forecaster, as if he knows everything, because you can tell from his appearance. And people just sit there and take this guy seriously, even though the stuff that's coming out of your mouth, it seems like people should be taking with a grain of salt, okay? And here's the other thing. I want to tell you something, Greg. When was the last time the stock market was really in a bubble? Okay, the last time the stock market was really in a bubble, another time was around the late 2000s, because that was obvious. We had bad mortgage-backed securities. We had a kind of a housing bubble that was inflated by, lending standards and interest rates, but we really don't have that right now. So we don't have a lot of phony factors, all this artificial consumer spending that's going to pump up the economy and drag it down. And another thing, when you look at the bubble that happened in the late 1990s, we saw the NASDAQ literally go from, I believe, 2,000 to 5,000 in a matter of months. But we only have seen the NASDAQ go up 25% in the last 12 months. This really does not sound like a bubble technically, okay? And in the late 1990s, we saw price-earnings ratio of companies like 40, 50, 70, but a lot of companies are still trading under 10, 20, some are trading about 30. I mean, some are very high, like Netflix, Facebook, Tesla, and it wouldn't surprise me if those companies crash. But really, in the overall, when you look at price-earnings ratios, they're not in a bubble. When you look at Dow Jones and the S&P, I mean, come on, do some research. Don't listen so much to these facts and these points these guys continue to promote.
On here, it all comes down to a misallocation of funds to the nth degree by the Federal Reserve. What we really need to be focusing on here, people, is something I've been covering for weeks. It's this issue in the Ukraine. The Ukraine is clearly in the crosshairs of Russia. And this is going to affect the markets. We found out today they're going to be ratcheting up sanctions. It's all nonsense. I've been over this. It cannot do a thing here. There's nothing that sanctions can do to stop Putin from doing what he wants to do here. That he cannot be hurt in any way. And I've gone over this at length. So he's going to take more of Ukraine here. There's no doubt about it. And this is going to affect equity market, in my opinion. Could happen tomorrow, the next day, the day after that. We're just going to see how this plays out. And we will adjust our positions accordingly at that time. So I'm pretty confident, again, and I've been saying this, although I've gotten a lot of feedback from all of you, a lot of you out there, telling me how wrong I am about this. And, maybe I am, although I can't see it. I can't imagine what would stop Putin from taking more of the Ukraine and challenging NATO. I think that's what this is all about. The leadership here in the United States is pathetically weak, and he knows that.
Okay. Well, first of all, when was the last time when we had some foreign conflict, we saw the markets crash? Really, when was the last time? And we've seen a lot of talk about invasions and all that, but the markets hasn't really crashed, people. You see, this guy, he's giving you a bunch of possibilities, but he's not giving you facts. He's not giving you previous outcomes to support his claim.
NATO, what are they going to do? What are they going to do? They're going to send troops, and they're going to send young men and women into war over the Ukraine or any of the...
Okay, let's skip this war part, please. I don't think we have enough time.
I am still short this market, and I know a lot of you are telling me, Greg, you're wrong.
Yeah, you're shorting this market, even though I believe you were bullish about 2-3 weeks ago, even though at a time when the market was correcting. I mean, I don't know what to tell you, but out of all these people that I know, I think that he is the most extreme end of the ladder when it comes to doing the opposite of what he tells you, and you'll be right. Because, I don't know, he's probably the most wrong person that I could ever think of. Maybe Peter Schiff, maybe Jim Cramer, I don't know, but, oh gosh.
Maybe I am, but I can say that...
Maybe you are wrong, but you always are wrong. Have you realized that? I guess it seems that way.
I am not even thinking about what technicals are doing. I don't even look at it right now. I don't care. I'm just looking at the global picture, and it doesn't look good to me at this particular point. We'll see how this plays out. That's what this is all about, people. All right, so pretty much that's what I want to cover. Economic news today. I mean, really nothing good. There is no recovery. We know this. They can tell us whatever they want. They can try to flood our heads with nonsense after more nonsense. But the truth is what it is. And I think the market is getting a dose of that right now. And we just have to see what happens in the next, week, 2 weeks or so. And again, pay attention to what's going on here in Ukraine. I think it's huge. It should be.
Okay, yeah, I mean, there is really no recovery overall, especially for most of the population. Now, certainly if you are the very few individuals, yes, there is a recovery. You know, you've benefited, I don't know, from the bailouts or the trade policies or the recent upswings in the markets. And I understand your point, and this is largely done because of our trade policy, Wall Street, a lot of other factors. But just because there isn't no real recovery, which I don't believe we actually had a real recovery in about 20 years. In fact, the recovery of the early 2000s, I believe, was phony. It was propped up by low interest rates. But the fact is, just because there is no real recovery, it doesn't mean that the stock market is going to crash. In fact, the stock market really doesn't have an overall correlation with the average Joe's pockets. But most importantly, just because there isn't a real recovery, it doesn't mean that the doom and gloom that you keep pointing out is going to necessarily come true. You see, in this system, in this process of analysts, these so-called, what they call them, these pundits, these gurus, whatever, clowns, they are on the opposite end of the ladder. One opposite end, they keep telling you it's a great time to buy stocks, always, the economy is doing better, and then you have other people that tell you, no, we're in a crisis, the end is near, we're going to have lots and lots of turmoil, currency crisis, buy gold, stay away from stocks, stay with anything that has to do with U.S.-related securities. And so this is what they do. But the reality is neither of the opposite ends are reliable. Neither of the opposite ends are going to help you significantly. This is why you have to do your own research and follow very, very few people. Okay? Because if you continue to listen to this guy, you're going to continue to experience a lot of problems. And this is not because I'm just a rude, insane, crazy person, because these are the facts. This is a guy, like I've mentioned in my previous clips, he has removed his previous videos. And when people do that, to cover up their track record, serious action needs to be done. I'm surprised that serious action hasn't been done, as far as I have heard of. So, I don't know what to tell you. So you all really need to simply understand what you're getting into.
The front story everywhere. But all they're doing is talking about the possible evidence they found with this plane. Oh, maybe it's here, maybe it's there, or we found fragments over here, but we don't know what they are. I mean, you got to laugh at these media outlets. Breaking news. Are you kidding me? Break this, okay? Because I think we're all sick of it. All right, people, I'm going to let you go. I'll see you tomorrow.
Yeah, okay. Let me tell you something. Your media, your YouTube, gold pumping media, all these things that you continue trying to promote, I don't believe it's even more or reliable than the so-called established large-scale media. In fact, I believe the so-called media that's all part of InfoWars, Russia Today, YouTube, SGT Bull, Mike Maloney, hearing a bunch of baloney. In fact, I think there's a lot of dangerous and more dangerous elements than the so-called large-scale established media. Because at least the large-scale media networks, they have certain standards that they have to follow by. So people, just because they act like as alternatives doesn't mean that they're the boat that you have to jump on. It's really a Trojan horse. It's really what I call a controlled opposition. I don't know what to tell you people. Anyway, stay tuned. I'm going to expose more of these people. And again, I might be wrong in the short term, but I believe in the long term, this guy is going to give you a lot of promises, but not a lot of results. And a lot of the things that I forecast simply are going to come at least much better than what this guy is trying to tell you.